Welcome to StockMarketFunding.com. SMF Pro Trading students, please mute your microphones. I'm going to do a nice videotape. It's called the VIX, Market Volatility Index, CBO. And when it goes down, stock markets are going up. Just the opposite of the S&P 500 goes up and the lower this goes. And basically, the fear indicator, the lower it goes, the higher the complacency level, the less fear, everything is okay. Now, back in other times, going back, I'm going to show you the history of it, going back to 1989. And basically, we had high levels when we went into bear corrections. These things went straight up. These things went straight up. The ultimate one ever is when the markets were diving and going down in 2008. This thing put a breakout reading of clear up here above 80. Well, since the markets have made their big move up, the fear has come off. It's come off. It's come off. And the lower it goes, the higher markets go. But guess what happens here? Guess what happens here, people? The less fear means that everyone's involved in the market. And everyone's getting all invested. The lower it goes, the less fear, the higher, the more people are fully invested. The lower this goes, the more fully invested people are. And guess what happens? It starts to go up and markets start to correct. And what I'm telling you is that based on where these markets are and the amount of exuberance, it would not be abnormal to see this volatility index, like I said, a fear indicator, to come down here. Right now, it's got support. And we had a big down move in the S&P last week. This big red bar went straight up. Markets went down. Markets made a retracement, and this came back down. This is support 1, support 2. The less fear, the more complacency, the correction is around the corner. And it runs invert of this other chart of the S&P, the S&P 500. Here it is. This is the S&P 500. Go straight up. Here's the VIX. Watch. And the VIX is the fear indicator, and the VIX is right here. And I'll put it on the chart. Here's the VIX. It goes down. We're putting in lows. Second half of the year, we're going to have low readings. The lower we go, the bigger the pullback is coming. You better be selling into it, because if you're part of the people out here that are greedy, part of greed is built in here because there's no fear. I'm going to get more, I'm going to get more, I'm going to get more. If we break the support level, yes, the markets will go up. But if we don't break this level and we start to hold this consolidation on this complacency and fear indicator related to the S&P 500, and we do not break and we start to consolidate on positive volume, that means the S&P 500 and other indexes are going to sell off. This shoots higher. Markets go down. That's what I got to tell you here. I will show you a quick snapshot of the monthly. Going back to 1990. And basically, people don't have any fear. But remember, the world isn't the same as you think it is. And we're in a monthly sell signal on the VIX. The lower that you can see that when this thing gets low on this monthly level, like I taught you on the other charts, is that when this starts to go that way, that means you had the big breakout and the markets went straight down in 2008. Look at that. We've come straight back down in this indicator. And we are at a monthly double bottom. Let me draw you a horizontal trend line. We are at a monthly bottom. Back in 5/1 of 2008, this thing broke out and the world went straight down in the gutter. And why is it, people? Because people don't have, it's all about thinking, it's all about greed, it's all about bubbles, it's all about exuberance, it's all about complacency, it's all about nothing can happen to me, it's all about I'm counting my money. But guess what, people? When you hit down here, and we'll be monitoring this over the next 6 months. We are at a bottom right here. If we slip through it, we are going to put in what we call a blow-off bottom reversal up, and the markets are going to put a blow off bottom on the top and start down. And that's the gift of understanding the fear indicator, the complacency indicator, the greed indicator. The world is okay. Nothing ever happened. Everything is hunky-dory. Unemployment isn't high anymore. Stimulus, oh, everybody's spending money like mad. No worry. I own my house. No foreclosures in the market. Everything, the nightmare is over. No, it's not over. And there's another big move up. 2011, I know that mathematically we gone big breakout, big breakdown. The psychological component, it's a psychological indicator of where the investment and trading community is. And guess what? Corrections happen when people are off guard. And you're getting down here in these levels. You stay tuned. You stick with stockmarketfunding.com. You don't be part of all that crap you see on TV and all of that stuff that you're preached to. This is real. And I won't be wrong. And you can go back and you can look at the next update in 3 months, 6 months from now. In 2011, you can come back and revisit this tape of what I said. But guess what? The only person that's going to stop from being a victim to markets is your ability to take control of yourself. And if you own assets and you've had a great move, it's time to ring the cash register, because there is another leg to this here. We're going to come down. We're going to put a bottom. It's going to be a blow-off bottom. We're going to get a move up. And stock markets are going to go down. And that's between now and the end of the year, 2011. And we could consolidate down here. Look what happened the last time that people got complacent. For a number of all of 2004. Look at how long the market stayed overbought. But in 2007, we started to go up. And we did. And there was the holy grail. And stock markets and worldwide, everything went down. Look at, we're no out of the woods, people. And you're going to have another big up move back in here. Don't be the victim.